Hello again and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Thank you for joining us. Today is November 16th. We got 1 week from today is Turkey Day, and thank you for joining us for our market insights and observations. Well, the three topics we're going to discuss today, it's just the beginning. Brace for impact and the Blanke Schein Wealth Management Holistic Wealth Planning Approach, and we'll discuss that in more of a minute. But what am I discussing at the very beginning? Well, it's just the beginning. At the Federal Reserve, it appears, and all the conversation, all the headlines are now saying that we're going to have a soft landing, and that's a high potential for the Federal Reserve has basically is on path or a glide path to pause even in December on their next hike and continuing into 2024, meaning did they quite stick the landing for a soft landing? There might be some evidence here that we're going to discuss that you might want to brace for impact, simply because when the Federal Reserve has done it historically, it's been very challenging over the last 5 times for them to actually stick the landing. But there are a couple of times in history that prove that they have the ability to do it. So we're in the Goldilocks approach where we could see a Santa Claus rally. We're seeing pressure off of the 10-year Treasury. So yields are coming in, if you will, or lowering, if you will. So pressure's coming off just a little bit in terms of the markets. And this is really what the Federal Reserve is pointing to, this chart here. It's a chart that shows unemployment and wages. So this is the last 50 years of historical data that show in the black line, the U.S. unemployment rate. And the 50-year average of the U.S. unemployment rate has been 6.2%. The blue line is the wage growth in the U.S. in terms of your annual percentage of wages have grown around a 4% number. So if you look at it, here are the wage growth right here. And then historically speaking, you're looking at what the unemployment rate average has been, 6%. Okay, but anytime you get, in this case, the wages above the unemployment rate, and we got that back in the 70s. Okay, so that's why the Federal Reserve has to watch their P's and Q's, because they might not want to, or markets can't get ahead of themselves of declaring victory, because that was a stop and start sort of inflation continued to get way ahead of itself because the wage inflation was very sticky back in the late 70s. Right now, the trend is your friend, and so there seems to be sort of a pressure easing in the wages, and we can see unemployment going from 3.4%. It's going to go up higher to maybe over 4%, but we'll see how high it actually has gone. In history, when we get times like these, unemployment, if we hit a full-blown recession or even a deep recession, unemployment gets out of hand. Obviously, it corrects. It's not the extreme that the Federal Reserve is looking for, but they wouldn't be far off by saying, hey, a recession is not that bad, to, again, basically get that supply and demand dynamics back in line. Again, we talked about the 10-year Treasury on track for falling at this moment in time. But yeah, there's support here. So we could see this bounce back up, and that could be the concern. So it's not a total breakdown. It's just a test of this long-term trend line right here that we're seeing. Now, how do we know if the economy is going to be in that Goldilocks window or if it's going to break down further? Well, one would look towards, historically, the commodities play and complex by way of energy as well as natural resources. If you're consuming and you have that, the economy is pretty strong. Now, energy has had sort of a upward trajectory year to date, but now it's testing a moving average right now. So this is going to be the test. Let's see how energy plays out over the next couple of weeks. Today, energy's down a lot. So it's really testing. We'll see if it closes below this moving average, which means it'll give us a direction of where energy is headed, i.e. a future indicator of demand, whether it's stronger demand or weaker demand. Now, this could be just the beginning. So if you look at the retail earnings, okay, if you go into the high-end retailers, they have now ultimately said, hey, listen, the consumer is weakening on the high end, which is something we haven't heard in quite some time. And then last night, Walmart just reported that they are sounding the bell that the consumer is slowing down. So the high end and the low end are both now confirming the slowdown is here. again, here's another sort of look at the commodities complex. And ultimately, as we look at, let's see here, we're just seeing natural resources right now, testing the red line here. Now, finally, let's go to why we do what we do at Blanke Schein Wealth Management. I was fortunate enough to receive a letter of gratitude, a card in the mail earlier this week, and I just want to share it with you. I won't share who the client is, but I'll share you the message. Dear Robert, your patience, kindness, and generosity with my daughter and granddaughters is amazing. I realize you have expertise in helping women and all that they do, and you're wonderful. Much gratitude. That's why we do what we do. We take a holistic approach to the whole family, multi-generations. Whether it's just maybe one generation might be our client, we're happy to speak with anybody that's important to you. And as we move into Thanksgiving, you're going to have a lot of the kitchen table conversations, and oftentimes it comes up about money. Well, feel free to use our name, have us connect us, whether you have them connect through social media, the younger generations, and tell them to reach out and find us so that they can continue to get this education, forward one of these links, or even make an email or a personal introduction. And we, again, like we said, we've been here for 40 years, but we're built for the next 40 years, generational speaking. And again, if they're not clients, we'd love for them to be clients at some point in time. And because you're part of us, they're part of sort of everything that we do. But what is the holistic approach that we do at Blanke Schein Wealth Management? Well, quite simply, we go beyond just regular investing and financial planning for clients. It's a broader and a deeper, basically, model that we engage, and we consider factors that are far beyond just, the investments or the day-to-day lives. We also found that over 92% that engage in this holistic financial planning approach with Blanke Schein Wealth Management feel that they're not only on track to meet their goals, but they oftentimes feel that they're way ahead. And it's all about being in control, knowing where you are in your current situation in life, your goals and your feelings, and having that connectivity, knowing what you have, why you have it, and what it's supposed to do for you in your investment portfolio, and having confidence to know that, yes, this world is ever changing, and the world is always going to give us negative headlines. I mean, that's the one true constant. But know that you have a plan. You have advisors that are going to guide you through the ups and downs of the market, but making certain that your plan is connected to the holistic approach. And there's three basically principles that we guide ourselves through. One, as I just said, world's continuous, right? Your world is constantly evolving and it's always changing, and things always change. And there's always something going on financially speaking. So we welcome that conversation. The second part of it is we make it personal. We've had a lot of experience, years of experience, multi-decades, over 100 years of combined experience, where we've seen a thing or two, if you will, with regards to you might not be the only one going through this. And maybe there's a way that we've solved it for some other client that we can help apply that to your personal situation. And we're happy to have that conversation. And then we also engage in comprehensive services, whether it's engaging maybe a CPA or an attorney or somebody who has expertise even beyond the wealth planning space, such as a senior care advisor that we work with that helps families that are going through Alzheimer's and dementia. Ultimately, advisors in our industry, just about less than 10% actually engage in this type of holistic approach. I think that's what sets us apart. And that's why, again, we spend time of who we take care of, that people that want and need our help. And we're happy to bring you into our family, as we are a family here at Blanke Schein Wealth Management. But we talk about everything on this. Obviously your marriage and, and life circumstance, whether it be a home purchase or selling a home or buying a home for a grandkid or great-grandkid, or even traveling around the world. I mean, those are great stories and what we're doing, what we're planning. So again, we're making those planning calls for 2024. We'd like to know what's going on in your world, and we want you to make us part of that every step of the way, because we love being part of that. Well, again, our gratitude is thank you for being our client, and you are why we do what we do, from all of us here at Blanke Schein Wealth Management. Have a healthy and happy Thanksgiving. I'll be back next week, but I wanted to talk about that today so you can think about it next week when you're with your loved ones. So please pass along our name. We're happy to help in any way we can. Take care. Have a great day.